Welcome to the video. If you're looking for an intraday strategy that involves RSI, how to use it, how to build it, and what it does, then you've come to the right place. Let's take a look at a double RSI strategy. This functions with a certain trend under trend element to it. If you watch my other videos, you understand that. That's a good note. I'm the auger. I make a lot of technical analysis and trading videos. I run a stock trading business, and I do other stuff like that. So, this indicator strategy is built using two RSI. Inside of the RSI, on its standard settings, you're going to see this down here, the moving average settings. So we're going to want two moving averages. We're going to set the first one up at 14, and we're going to set the next one up at a 5 ratio to that. So 70 is 14 times 5 is 70. And then we're going to color the fast one green, and we're going to color the slow one red. Now this gives us a certain sort of moving average convergence divergence indicator, but is built using relative strength data. So it's somewhat similar to some of the other methods that I employ myself. And this can be a very powerful tool when you're looking at relativity relative to itself over time. And what this does, it does a great job of looking at trend. Because what this breaking this is actually a period of price staying above the prior highs. That's what would make this roll this. So it's sort of like taking a slower chart, like a 5-minute chart or a 10-minute chart, and we're speeding it up. So using this, your short entry on this would be like when these lines cross, this bar or this bar, and you could hold it next at any time. But for this back test, we're going to hold it all the way until the lines cross, which is not exactly optimized. You could run various sort of things inside here, like a faster trailing stop or even a faster RSI to get better exits inside of the larger trend. But this will do for now, and this will demonstrate the power and efficacy of this sort of strategy. So like, look at this one. It crossed here, and the line didn't cross all the way back over till here. It was long the entire time. It can be a very powerful trade if you use inside here, if you buy these lows, sell these highs, or however you want to do it. But just for this strategy, that's going to be our trade. We're going to buy it when it crosses there, and we're going to sell it when it crosses there. So without further ado, I'm going to go ahead and get into the back test. And welcome back. We finished the test, and you can see it did really well. It started off with $5,000, enough to buy 10 SPY shares or sell them. We ran it for 13 days or 5,070 bars. We had an average win of $14.78, an average loss of $10.81 for a risk to reward ratio of 1.367. We had 100 trades, so the back test was 100% completed. We had 65 winners, 35 losers for a 65% win to loss ratio. This gave us a total profit or loss without fees and commissions of $582.03, or an average trade return of $5.82 with to make an 11.64 return on capital, which is great for the small time we ran the test. If you want to trade this sort of strategy, make sure to run it under different conditions and on tickers you might trade besides the SPY. And I hope you learned something, enjoyed the video, and make sure to check out the rest of my content. Thanks. You have a great night.